right, guys, welcome back. We're ready to start a new session here with Renew Your Finance. We thank everybody for joining us again this week. We have another good topic tonight to kind of piggyback off of what we talked about last week. We'll do a quick recap of those here in just a minute. And this week, we're going to be talking about estate planning as well as discussing insurance and different types of insurance. So once again, welcome everybody. Welcome on Facebook Live. Welcome to our YouTube channel, family. So we're going to be discussing those topics and giving you guys some tidbits, a couple of things that we learned, and just kind of see what you guys think about the different types of insurances that you have or may or may not have, and why we think they're important as you go on this debt-free journey. So without further ado, we're going to have Rondell give us a quick recap, and then we'll jump right in, guys.
Hey, good evening, everyone. So as you're well aware, we're currently on our journey in becoming debt-free. And so we kicked it off to understand what your why is. And as you journey with us over the couple of weeks, we've been going back to the why in each and every step that we have already accomplished. So why do we need to have an emergency fund? We started out with, and we utilize the Dave Ramsey plan, which is the 7 baby steps, having at least $1,000 in your emergency fund for those things that may come up, because that is a way to get yourself like that one thing that you may have accomplished in the many steps that you're going to go over. And then from there, we talked about your step 2, making a budget and also creating that debt snowball. We had a couple of videos that we played for you from Anthony O'Neill that show you how to do that debt snowball. And also we shared a couple of tools with you, Mint being one of them, if you choose to use that application to create your budget and also to apply that application to your debt snowball. And so so as we continue the journey, we went into step 3. And step 3, we discussed and we talked about that 3 to 6 months emergency fund. Now, let's be honest, a lot of us, when we talked about 3 to 6 months emergency fund, some of us who may be in a single capacity didn't need a 6 months emergency fund. They may only need 3, because it's based upon the dynamics in your household that may be different from others. Like in my household, I'm a little bit paranoid. I mean, I'm one of those guys where, it's someone says sprinkling outside and I'm looking out the window and it's a typhoon. So I went 1 year, but this is based upon your dynamics in your family. But be sure to talk to your loved one, if you have a significant other, a spouse, about how do you both, because it's not his or hers, it's ours. Remember, that's one of the other topics that we had in the previous weeks, talking about his and hers and ours. And that goes along with all 3 steps that we have already accomplished thus far. And so tonight, Adrian and I, we had an interesting conversation. And I know you guys were like, hey, we're supposed to be talking about banks and yada, 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 and blah, 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 blah. But this morning, we had a crazy conversation. And for the life of me, I don't know how we got on that subject. We started talking about life insurance and the importance thereof of having life insurance. And let's be honest, a lot of us may take it for granted that we're going to live longer than what we perceive that we're going to live. If you haven't been on this planet in the last 2 years, which I think we all here in the channel and in the chat has been on this planet, we know we have gone through some things that in our generation, but maybe some of our forefathers may have seen, and we've gone through a plague. And we've seen some people, some loved ones, people that we knew, that may no longer be with us. And that is the wrong time, and me and Adrian were discussing it this morning. That is the wrong time to be retroactive about a situation that you could be preactive or, in regards to life insurance. So that's what we wanted to discuss tonight. We want to discuss estate planning. We're gonna hit that circle of life that you see there on the to a degree that you see on your Facebook page. But we want to hone in on certain things because we understand that you may have gone through it, maybe you not have gone through it, but I have gone through where loved ones have left this planet and they have not established any type of life insurance, no type of estate planning. And then it's left to those who are left behind, who are really truly in mourning having to cut that short because we got to deal with this situation of how are we going to put our loved one away and how we're going to take care of their affairs that they left behind for us. Because just because your loved one is not here doesn't mean the creditors are still not going to come and try to compensate or recoup what is owed to them. So that's what we're going to touch bases on tonight. And so walk with us on this journey. I think it'll be beneficial for everyone that's here in the room and those who are in the chat. Over to you, Adrian.
Okay, no problem. All right, guys. So one thing that we wanted to talk about why this subject came up is because as we're going through this debt-free journey, there's a lot of things, life is still going to happen. So there's a lot of things that can occur in life, like we all know with COVID going on, and you've got classmates that are, around the same age as you, and you see on Facebook that such and such passed away, and this makes you think, wait a minute, this person's around my age, and they just, all of a sudden they're here one day and they're gone the next, and they weren't prepared. They weren't prepared, with life insurance, or they didn't have a will prepared, because none of us at this point in our lives, we're focused on raising families. We're focused on, making sure that everybody in the household has what they need. We're focused on, our day-to-day lives. We're not really thinking and projecting that, something may or may not happen, so what we wanted to discuss tonight is for us to not only be good stewards of the finances that we have and we're managing, but also we need to start thinking about the future and thinking about planning in case, in case something else happens, because we can't control everything. We don't know when our day is that the Lord may call us home. So we just want you guys to just open up that discussion and you guys kind of tell us what you guys think. So when we say life insurance, what does that mean to you guys? Why do you think you would need life insurance? From your own perspective of when you think about life insurance. So we're just going to open that up in the chat here, and let's see what you guys think. Because my personal view of life insurance was a lot different. When me and DeShonda first got married, we had a whole life policy. We sat down with an insurance guy. He told us, this was good for us to have. And, we had, at the time, both of us was 23 years old. We had $100,000 policy. That's what we had. We had $100,000 whole life policy on both of us. And we thought that was, for a 23-year-old, $100,000 is a lot of money. So we didn't understand how much insurance you should have. We didn't understand, all the different things that went on with life insurance and how much coverage was enough and how much, you need when you have kids and all these type things. So we just want to see what your relationship is with insurance and with life insurance for one, and what you guys have on that.
With that said, Adrian, you made a great point about life insurance and what you need to do. And at the time that you and DeShonda had gotten life insurance out. And so in the chat, we got Rohan. He stated it's about leaving your family in the best financial position as possible should anything happen. And then we have Suzanne. If I die, well, she went straight to the jugular. Okay, shout out to Suzanne. Life insurance helps recoup losses and help those who left behind to cope better with dealing with the financial aspects. So yeah. I would agree with both those statements. I would tell you at one point in time when I was in the military, I remember I declined the military life insurance, and before it became mandatory that you have to take it. And the reason being is that we were, if everybody remember the Iraqi war that we had during that time, there was hundreds, maybe even thousands of men and women that were in the United States military that didn't buy in to getting life insurance that the military was offering. And so when they got killed in war, their families, their loved ones, and their children was left behind that didn't have any life insurance. Now, mind you, there was a congressional act that happened real quick to try to get these families something, but that was outside of the group life policy that a military service would have that allow us to take advantage of at pennies on the dollar. I mean, really pennies on the dollar. It wasn't until after something like that happened that they realized the importance of every man and woman in uniform having life insurance. So what they did is they enacted an act that made everyone, if you didn't have life insurance and you had to prove that you had it, if you couldn't prove that you had it, you automatically had to sign up for $450,000 worth of life insurance. And I think that was like $27 a month for that value of life insurance. And it was good for your entire enlistment in the United States military, whether you was in for 20 or you was in for 30 years. If you couldn't validate that, or you could not show that you had life insurance outside of what the military had to offer, you had no other choice to take that due to what happened during the Iraqi war, when a lot of men and women in service were found not to have life insurance and they left their loved ones back at home.
So good. Yeah. So, and we're going to talk about that, Suzanne. So I'll be really interested. I see Suzanne says she knows all about life, whole life insurance. And that's one of the things that we're going to talk about today, term life versus whole life. And,
yes.
And some of the benefits and pros and cons of each, and really what, from a financial standpoint, what that insurance policy is really for. When we say we have a life insurance policy, how much, how do we know how much we need? We've learned a couple of things from reading Dave's book and following some of his steps, and just trying to determine how much life insurance you need, and what's the purpose of the life insurance. So one thing that I didn't know, to me growing up, whenever you heard somebody passed away and they had life insurance, I always thought of it, and you guys can tell me what you guys think from your own growing up and what you thought about life insurance, was it's a large lump sum of money that can be used to pay off debts or make sure the family has this large sum of money. But what happens once that large sum of money has been exhausted? Whether it's 5 years, 10 years that it took them to exhaust that money, what happens now? Now that person is gone, and say that person that passed away was the breadwinner in the family. Maybe the family relied heavily on their income, to maintain the lifestyle that they have. So what happens now when that person's gone, and the one lump sum that they had on that life insurance policy they had, it is now been exhausted. It's 3 years later, it's 5 years later, and we've paid off debt, or in most cases for us, if we haven't learned to properly manage our money, that money, when we get that lump sum of money, that's no different than if we were to win the lottery. And they say most people that are not good, if you're not a good steward of $100, then you're not going to be a good steward of $10,000. You're going to have the same money habits that you have with the $100 if somebody gave you $10,000. So you're gonna, you're spending, your toys are just gonna get bigger, So, so with that being said, what do you guys think? What's some of the things that you think of when that money's gone? What happens then?
Oh man, if the money's gone, here's Rohan. You want to hear something sad? I heard nothing about life insurance growing up. It was until my 20s that I heard about life insurance from a friend that I worked with. Wow.
Well, that's most, yeah.
Yeah.
Most of us. Yeah.
I know for me growing up, life insurance was enough money to put somebody in the ground.
Exactly. That's a great point, Karen. Yep. They get just enough to bury them, and that's all they get. And that's all we leave them.
Yeah. For me growing up, they weren't leaving no life insurance behind. I wouldn't call what a family member said to me, but I would tell you what they. I would say it's a very derogatory thing they said. They would say they're not leaving none to these people to put them in the ground. They're gonna have to figure it out after they go. So they just, that was their mentality when it came down to life insurance. That in the culture that I come from, people deem life insurance as a way as a come up in life. as a way to enhance their lifestyle. You're not going to get rich on my death. That's where the culture and the background that I came from.
Yeah, exactly. Exactly. And one of the key things, and I want to go ahead and get to this point, that we found out, through what Dave teaches about life insurance. So one of the things that most people have as use life insurance for is life insurance is actually meant to take the place of the income of the person that passed away. And the way that they do that, and I never heard this before until we started following Dave, and Dave explained, really what you can use, what life insurance is meant for. And one of the things that he really talks about is term life insurance, because, term life insurance is much cheaper than whole life insurance. But at the same time, you want to make sure that you're covered during that term that you need the life insurance. So if you have kids, you want to make sure that you have coverage throughout the time that the kids are going to be in the house. If you have debt, if you have mortgage, these are all things that you want to think about as far as when you're selecting, how long of a term of life insurance you had. Like I said, me and DeShonda had a whole life policy, and we come to find out we started when we were 23, and we had been paying in it religiously up until we were 43, and found out, we had a whole life policy that had a cash value. And, the insurance guy, when we got into our 40s, he met with us again, and he said that, you guys might want to start looking at something different, because he said, as you guys are starting to get older, now your premium is going to be going up, and now the value of your policy eventually is going to be working against you, to where you're not going to have, like when we started, we thought we were going to have this larger, this cash valued policy that we didn't use when we were in the 60s, that we could tap into that. But unfortunately, as we got older, the policy started increasing and it started kind of eating itself. So we weren't going to have that, as we got into the 60s, like we originally thought. But anyway, but really the key purpose that I want to say with the life insurance policy is to have enough money in the life insurance policy that you can properly invest that money, and that money can continue to take the place of the person that passed away's income. So not only do you still have the money that's put away in an investment account, or you get with a financial advisor or somebody, and you can, kind of tell them what your goals are. My goal for this money when my husband passed away was for it to replace his income. And they are investment vehicles that this money can be properly invested in, that it can yield an annual return of 4% or 6% that will replace that person's income. So say you got an individual who's making $100,000 a year. This person was the breadwinner for the family, and they passed away. So by having a term life policy of 10 to 12 times their income, that money can be taken and invested, and now it can replace their annual salary. I never heard it explained to me that way, and that made so much sense to me that that the policy could be used for that, to replace that person's income. So now the family doesn't have that burden on them from having to. He said they just have to figure out how to replace that income. But by planning and making sure you're doing things ahead of time, you can already have things in place that, like, if I was to die or something happened to me and I was no longer here, then I'm confident that what we have done already, Shonda knows that money is going to be going into an investment, and it's going to replace my income, so she don't have to worry about my income.
So with those policies or those life insurers, let's share with them some of the ones that Dave shared with us in regards to what 8 types of insurance that you should have, or you should have access to.
Right.
So if I can get everybody to fixate their eyes on the screen and let me know when you can actually see the 8 type of policies.
Yep.
Can you see them?
Mm-hmm.
Okay,
Yep.
so Dave, and this is something that Adrian and I have done, or in the process of doing, going further to doing, is that Dave recommend 8 type of insurance. So Adrian kind of went over the first policy that he had, which I currently have too. I too used to have a whole life policy. I had that on top of my military term life policy that you see here, because I was told that, you know, whole life is the way to go. And my whole life policy was $500+ a month. And I was, by the time I realized what I was doing, to be truthfully honest, I didn't know was fully aware and knew what whole life policy was. I realized that I was in a vehicle that I shouldn't have been at the time that I was in it. And so therefore I cashed that out, recouped those funds, and now we have a term life policy insurance. And this a lot of stuff that Adrian has already gone over in regards to the term life insurance. The Institute of Information says only 54% of Americans have life insurance, which I think that's a true statement there within itself. I know myself, I had 2 people that were close to me in the recent years of COVID that had passed away. And each one of them had little to none in regards to a life insurance policy, where the loved ones that were left behind had to figure out how they were going to pay for burial expenses and any other things that came up in regards to them passing away. Down here, this is what Adrian was sharing with everyone, is that, but if you have a term life policy for 10 to 12 times your yearly income, your family wouldn't have to worry about making ends meet, losing their home, or changing their college plans if you are not there to provide for. So that just goes back to show you that there is a purpose, there is a strategic purpose for a term life policy. Not to, from what I grew up with, to ball out. And most of the people that I was around as a young man in my younger days, that's exactly what happened. Someone in the neighborhood may die. They say, hey, their grandfather had a policy. And then next thing you know, and I know one person in particular, that when their grandfather died and left them this money, that person immediately went out and bought Mercedes-Benz and two or three Mercedes-Benz at that. And I was like, how is this kid who's the same age as I am in high school is able to afford a Mercedes-Benz, driving around in a Mercedes-Benz? Where it came from, lo and behold, it came from this. When their grandparent died, they left the premium in their name, or they were the benefactor of that premium, and that's what happened. And so we have to look at it. What are we doing now? We're trying to make sure that those who we leave behind, if you're me, Stephanie and I, it's just her and I. We don't have any heirs, you know. So we're looking right now. We're looking at all the nieces and nephews in our family, and wondering which one we may select, or those who we may select as our heirs when God tends to take us home. Another policy that it talks in here is auto insurance. Now, I'm gonna tell you right now, this is a heartburn for me, and so some of you guys on the call need to forgive me. But Adrian, I mean, what is your experience? And anybody on the call, have had a bad experience with their insurance company in regards to their auto insurance? I know I have, and I still have some reservations about auto insurance. Now, mind you, I do have insurance on my car because I'm required to carry it in the state of Virginia. But I have a bad taste in my mouth when it comes down to auto insurance, because something in me feels like I'm just giving my money away for something that I haven't gone into an accident, that is, in the last 10 to 15 years. But Adrian, what is your experience with the auto insurance companies? Share that with me.
My experience, for me, we've always had auto insurance, and one thing that I found out is that you need to at least go out and shop your auto insurance, at least once a year, because what I found out, me and DeShonda had Geico insurance. I guess I shouldn't have said the name, but we had this insurance carrier that we had for since we got married. When we first got married, we both went to this insurance provider, and we had them for, like, I want to say, and we were young when we got them. We were 23 years old, so nobody ever told us we were supposed to shop around and check every couple of years. And we just, we just made the payment, we know the premiums went up, throughout the years, and we just paid it. And the problem was, when we finally did decide to shop and we looked around, we found out we were paying like $1,500 more a year for this policy than another, from just shopping around to another insurance company. And we were shocked to find out, that we were paying that much. And we talked to the current insurance provider, and they said, well, we can do this. And they knocked a little bit off, but it was still over $900 a year more than what, this other insurance provider did. So we learned very early on that, after this, that we need to shop around, every couple of years, you need to just at least make sure that you're not overpaying for insurance. Because they're not going to tell you that, they're going to continue to keep you as a loyalty customer, and it's going to continue to go up. And the other thing that we learned is the ability to, now that you're done and you got your emergency fund, like we talked about last week, you can increase your deductible because now you're able to absorb some of the more of the costs internally. Because the other thing that really burned me with my insurance company is, as soon as you used it for anything, your premium just shot through the roof. So you almost scared to use the policy, because as soon as you had a claim, your insurance policy was the next renewal period, it was up several $100s. So that was my experience with it. So
Yeah. So my experience with auto insurance is love-hate. So I hope my cousin is not on the call tonight, because she actually has a State Farm insurance business. So she actually called me when I had a bad me and Adrian was in a chat, and she happened to be in part of that chat, and I was just trashing the auto insurance company. And the reason being is that like Adrian stated, as we go through the steps and we find ourselves in some better positions in life, I wanted to increase my auto insurance deductible to like $5,000, because looking at the value of the vehicles that I have, I know that if anything that I need to replace, it's going to have to be over that dollar amount there, because the assets that I have is a depreciated asset, which is the cars. The cars are not appreciated. Now, in this market, they appreciated some because inflation is out of control. But for the most part, your cars are going to depreciate. And so when I talked to the insurance company lady, she was like, no, sir, we can only, like, Adrian, I think he can go up higher. I can only go up to 1,000. And I was like, well, ma'am, I just don't quite understand, I have a great driving record. I have this. She said, sir, that's our policy. That's how we're able to make our payments. And I'm like, okay, so you're telling me the monthly payment that you make off of me, you prefer that over the 6 months payment that I can pay? She's like, yeah. And I didn't realize when I looked at that 6 month payment versus that monthly payment, I did not realize that I was actually paying more money in my monthly payment over 6 months than paying 6 month payment all at once. And the lady probably kind of slipped that out. She probably didn't mean to slip that out. And I was like, nah, I'm just gonna pay you all together. And then what recently kind of turned me off is that my insurance company does not have windshield coverage. In order for them to cover windshields, like from, rots popping up on your car and stuff like that, it has to be at least $1,000 worth of damage before they even consider replacing the windshield on your car. Where some have that all-inclusive coverage that if you get a crack in your windshield from whatever the case may be, a rot chip or something falling on your car, you all have to do is call in and it's already forgiven and you're already taken care of. So I found that over the last couple of years, I have not, even though I had some legitimate claims that I could make against my insurance policy, I haven't made them because it was cheaper for me to pay it out of pocket versus utilizing my insurance policy and giving them a deductible to fix my vehicle, with the exception of an accident that was a no fault to us that happened last year. Well, outside of that, anything that comes down to a claim, I find now that it's just, I really just have the insurance policy so I can be in compliance with the state laws of Virginia.
Yeah. And Rohan brought up a good point, is that you can actually go onto your policy one of the questions they ask you is how much do you commute or how much do you drive the vehicle? The good thing about that is, once you lower your amount that you're driving the vehicle, that also helps bring the cost of your insurance down. So that's a great point, Rohan. Yeah, because that's another way you can kind of help bring the cost of insurance down. And for us, increasing our deductible, like we have a $2,000 deductible because we drive older cars. I think our newest car we have in our driveway is maybe a 2010, I think. So the deductible on those and the insurance cost on those are very low. So I think for the vehicles we have in our driveway, I want to say we pay, even adding a teenage driver, which we just added a teenage driver onto our insurance, we're paying right now around $1,600 a year. Is what we're paying for 4 vehicles with a teenage driver. And that's with us having the $2,000 deductible. So because now we're one of the benefits of being debt free and having a fully funded emergency fund is that we self-insure ourselves. So now we are a lot more, it's a lot easier for us to be able to absorb the cost of if like my daughter had an accident when she was before she even got a license, and she ran into Rondell's car in the driveway. So thankfully for us, because we were on this journey, I just paid to get the repairs done out of pocket instead of going through the insurance company. Because had I gone through the insurance company, they would have paid to repair his car and repair my car. But the cost of what I would have had to pay out of pocket for the next 5 years would have probably far exceeded me paying that insurance out of my pocket, just the increased premiums alone. So that was, so that's one of the, like I said, one of the benefits of that. But we just kind of wanted to touch on auto insurance, and because that's another thing that you want to make sure that you got enough coverage. And with this sue happy culture that we're in right now, you also want to make sure that you have, in case you do have an accident and for some reason you may be at fault, you want to make sure that you have enough coverage in your premium to take care of anything that may arise. That's not something else that you have to worry about. But that's something, yeah.
Yeah. So again, you need to make sure that you adhere to those state laws, because some state laws don't require you based upon where you live at. So here you need to have these coverages, depending on, especially if you have a lien on your car, you're going to have those comprehensive coverages because the bank wants to insure their investment or what you're paying for. So make sure you take a look at your policies and review your policies every now and again. Stephanie and I, we look at our policies every 6 months before we renew, so that way we can make a decision whether we're going to continue our services with this USAA is who we're with right now, or going over to Geico or going over to State Farm, Allstate. There's a number of agencies out there that can probably give you some quotes on car insurance. One of the other insurance that you come in contact with is homeowners insurance. Now, those of you who are aspiring to be homeowners or currently homeowners, I would say by all means, you have to take this seriously. And I did not know the full details of homeowner insurance until I purchased my first home. And that's a lot of paperwork to go through to understand what you have or what you can use or claim against your homeowner policy. And renter's insurance. There's plenty of times since when I was in the military that I've used this quite often, because the places that I was staying were not my own. I did not own that home. However, my property has received some type of damage during the time that I stayed in that thing. And most renters don't automatically cover your things inside your renter property or the property that you're renting. Most renters will ask you, do you have renter insurance? And you say no. They can probably afford to give you a policy that can cover your stuff in there at their price. But I decided to go through my banking institution that also have an insurance arm on it and got my own renter's insurance. And I had that in for years until we moved back here to Virginia. And so some of the things that you have to take care of or have to be aware of when you go to renter's insurance is that not only you need to be aware of your home, but you need to be aware of where you moved at, where you're moving at. Some areas where you move, homeowners insurance costs more than others, depending on where you live at. Like if you lived in a coastal region, like my mom lives in Florida, and last year they had a record number of tropical storms and hurricanes down there. And I remember distinctly that she told me that her insurance from the previous year, when those storms hit down there, has increased by $900 the following year. They already told them up front, due to the storms that happened down there, they forecast that insurance, that the damages is going to be X. So therefore, they already applied that cost to those people who are insured by them. So that way they can be able to take care of that, those damages when they think it may hit down there. Or you live near water like we do. We live in a community that has a lake, and based upon the location of our home, they had to determine, our insurance provider had to determine whether we needed flood insurance or not. Because if our home happened to flood out, because you can get a home that does not have flood insurance. I've come to find out you can get flood insurance even if you don't live near any body of water. Because if your dishwasher or pipe bursts, that is also flooding. And they may or may not take care of the repairs.
Cover that.
Cover that during if that situation happened. Like it happened to me with a rental property in Missouri. I had a water heater, did not know that the drain pan was backed up in the clog. And what happened is that it flooded the room behind them, not only the room that it resided in, but the room behind them and into the hallway area. All that carpet was supposedly all damaged. However, I had this policy in there because it wasn't that much. And being in Missouri, that's probably the reason why it wasn't that much, because they don't expect it to flood in Missouri. But it helped take care of some of those damages in regards to after you pay the deductible that I had with the flooding of those areas, those rooms in that home. So you have to look at it. The insurance company will replace or rebuild your property, even the costs go over your policy coverage. There's a limit to how much they'll pay out, usually 20 to 25% above the amount you insured, unless you opt for more coverage. So this is another thing that Stephanie and I, every 6 months, because one, we have a mortgage loan on our home currently right now. And so we have to have this as part of that, part of having a mortgage loan. We have to have mortgage insurance, but we reassess every 6 months. We look out there, see if there's any other providers out there that can provide us a better policy in regards to these things in regards to a mortgage or a homeowner's insurance. So that way we can get the best bang for our buck and the best coverage for what we have.
Yep. Another good point Rohan put in the chat is the bundling. Bundling your insurance with homeowners, auto, and any other insurance, life insurance. If you can get them all with the same company, they normally give you, anywhere from a 5% or more discount, across all those policies, which, 5% can add up, if you're spending, several $100s with this company. So that's another thing to keep in mind when you're shopping, see what kind of bundles they got, as you're shopping, Another good point that I want to add, and my wife DeShonda can speak on this as well, is when you have your elderly parents and they have their homes, make sure that you discuss with them and make sure that you're aware of what kind of homeowners insurance policy we have. Because we had a great situation. Sean, I don't know if you want to chime in here and talk about that a little bit, but we were under the impression that her father had, homeowners insurance coverage on his home, and unfortunately, they had a fire and it came out that, the policy that he had was really one that the mortgage company had to cover themselves for the mortgage, but it wasn't really a homeowner's policy that really covered the rebuilding of the property and the other, their belongings within the house. And we didn't know that. We thought that they had a policy. He was paying on it when she talked to him about it. and so that's one thing that you guys may want to keep in mind is to make sure you talk to your elderly parents, or if you have elderly aunts that may be widows or whatever, talk to them and make sure that they understand that, especially if their home is paid off, they own their home, make sure that they understand make sure they have the proper coverages and things for their homeowners insurance, because that's some things that, they may not, like you said, they weren't taught these type things, with making sure the coverages, they just sit down in front of the insurance guy and whatever they tell them, that's normally what they go with, so they don't have the means that we have at our fingertips to research all these different insurance companies and know what's good and what's not. They just go sit down in front of an insurance provider, and whatever they tell them, that's really what they go with. So, but yeah, did you want to add anything to that, Shonda?
I guess, just to piggyback on what you said, just to make sure that, if you do have elderly parents, that, like Adrian said, may not know as much about policies, or, we don't know much about them ourselves.
Right.
So if it's getting to a point where you may have to start taking over things, you may need to make
Yeah.
that call directly to the insurance company to get a better understanding of,
Yeah.
what this policy is, what it covers, how long it's for, and that's
Yeah.
whether it's for
Mhm.
the home insurance, car insurance, life insurance, any of that.
Yeah.
Just make
Mhm.
sure that you have a good understanding of what policy they have, because it could be the same thing, that they've had this insurance policy for so long that when they got it, it was a good policy. But
Right.
now it's been so many years, it's
Yeah.
no longer
It
sufficient.
don't even, yeah, it won't even cover to rebuild a house because the house is appreciated, over the, 30 years they've been in it, or, or whatever. So that's just one thing that we want to add to it. So, okay. All right. Thank you, Bear.
Yeah.
All right.
You're welcome.
You can go ahead, Rondell.
So the next insurance that we want to discuss is one that I believe we may have incurred on ourselves, or we know someone that occurred, is health insurance and not having health insurance. I would tell you that this is probably one of the fastest growing debts that we have going on in America is with medical bills, medical expenses. This is so prominent that in the House and the Senate, they talk about this all the time. This is how Obamacare came into play, because there's a lot of us around here that just not have any medical or health insurance to cover the things that we need to go be seen for. And it's something that I think is very necessary. One, I'll be honest with you, health insurance, to have long-term health insurance, is one of the driving motivations that kept me in the military beyond 20 years. Because now that I'm a retired military member, I have what is called TRICARE for life, my wife and I. And my premium is cents on the dollar of what I hear other people who are out here in the in this economy, or in this private sector, are paying. But as you can see in this statement up here, on the first bullet or paragraph, about 67 people who filed bankruptcy do it because they're drowning in medical debt. And so most of you on the call may or may not know that I recently had a surgery back in May. And you may find it funny, you may not find it funny. But when I came out of that surgery, and I finally was coherent enough after everybody left, the attendee, or the counselor down there, came to see me, and I was like, "All right, ma'am, how much this is going to cost? Because I know this surgery was not free." And she started laughing. She said, "Mr. Smith, for you, it is 100% free." But the number that she quoted me, that if I wasn't affiliated or was a member of the United States military, that surgery was well over $100,000.
Wow.
Over $100,000. And so just think about it. You go in there and you get a very much needed surgery. And now you're spending a good portion of your life, if you don't have any type of coverage, paying off that surgery, because not only did I had that surgery, my mom had that same surgery. Luckily, she has her husband is was um was prior military, and she has some of the same coverage that I had, and she would be paying some of the same type of medical expenses that most people are paying for the things that they need to get done. And so I'm not familiar, and I'm gonna let Adrian talk on some of these topics that's down here in number 4, because I don't have to use that because of my my medical coverage, and so I'm a little bit naive, or I'm a novice when it comes down to HSA. So Adrian, could you touch on what HSA is?
Yeah. So basically, the HSA, and this is the first, my current job that I've been at for the last year. This is the first company I've worked at that had an HSA option. So basically, in order to have an HSA, you have to have a high deductible insurance plan. The one thing that I found, because I'll be honest, I've had some heartburn with the amount of premiums that we pay for our healthcare coverage, especially the previous company that I came from. It's ridiculous. I mean, I want to say for the coverage for me and my entire household, we were paying upwards of $8,000 a year, just in healthcare coverages. Up until the last, 10 years, it used to be all we had to pay was deductible. But now with the changes in these healthcare policies, you still, even though you're paying that much for the policy, you still have to come out of pocket and meet what they call a minimum deductible. And that can be anywhere from $3,000 to $5,000, just to meet the minimum deductible. The insurance company will pay for some things, preventative maintenance, routine stuff like that. But if you have anything that's out of the norm, or have to go in for anything major, then it can get pretty expensive until you reach that deductible, and you're responsible for part of the deductible, until you hit that $3,000 limit, or whatever your minimum limit is. So one thing that I did find particularly good for us, and this also ties back into us being on this debt-free journey, is that the new company offered, like I said, the high yield savings plan, as well as the HSA. So now for the first time, we have an HSA account, and that has some great benefits to it, because you get what they call a triple tax benefit. One is everything you put into the HSA is tax deductible. So you get a tax break. It comes off of, it's non-taxable. So it comes off of your annual taxable income. If you, anything that you take out of the HSA account also has an investment portion of it, that anything that you put in that HSA account, you can take a portion of that money and put it into an investment. Like you can put it into a mutual fund and have it to grow over the years. So this can be money that you can store up now that you can use 20 years later. And if you take, and the only caveat to that is it has to be used towards medical expenses. So the benefit for us is that because we're debt free, I continue to max out our HSA account, which you can right now for a family, you can put up to $7,200 a year in it. So not only do I get to write $7,200 off of my taxable income each year, but also I get to take that money and invest it in a mutual fund. So that's what I've been doing right now. Ever since I've had this, the excess that they allow me to put in that, I put that into a mutual fund that we're investing in every year. So then that money grows tax free. So, and then any of the medical expenses that we have, we take and submit the receipts for it, and then we tell them that we don't want to be reimbursed right now. So that money grows tax free. So all of that money I got in that investment account, it grows tax free. So whenever I get ready to take that money out, any receipts that I've submitted, any medical procedures that Sean and them have done, and a lot of things that you guys don't know that are covered, even the ladies' feminine products are covered under this HSA. So you can submit the receipts for those anytime they get them, and put those in the kitty, and they'll reimburse you out of this HSA account. So, I mean, there's a bunch of things, dental, the girls' braces, all this stuff that we had done. I submitted the receipts to the HSA account, and we just kind of paid for it out of pocket. And now all this money is tax-free and it's growing tax-free. So when I get ready to pull it out, I don't have to pay taxes on the growth either. So you just think about that, those benefits. Not only do you not pay taxes on it when it goes in, that's tax-free money. That's $7,200 a year of tax-free money you don't have to pay taxes on. If you put that $7,200 in the account and it grows to $20,000, you pay zero taxes on that other $13,000 worth of growth that it has. And then when you withdraw it, you don't pay any taxes when you withdraw it either. So a lot of people don't know that those are the benefits of having that HSA account. And my goal every year is to max that out. So I try to put the maximum amount in there. And if we ever have a situation where we need to, withdraw some of that money, I can just submit the receipts. They'll have the money in my account within 2 days. So, right now, over the last 2 years, we've been able to put, a substantial amount of money in that account that's sitting there in case we need it. Or if we do have a major medical expense, all of our deductibles are covered for the whole year, with our HSA plan. I think our HSA plan, we have to pay up to, I want to say $4,000 out of pocket before the insurance company takes over and starts paying for everything. So that's just a benefit of having the HSA and some things that you guys might want to look at. And the other thing that I loved about the HSA, the high yield, the high dividend account is anyway, those type accounts for the medical expenses, those are a lot cheaper than what I was paying before. Like I was paying almost, I want to say like $700 or $800 a pay period, for the insurance that I had before. And then with this high yield one, it like cut that in half. So all that money that I was already paying out anyway, I take that and have them put it directly into the HSA account. So I just had that money sitting. And because, our family didn't really go to the doctor that much. So we really don't have a lot of medical expenses. So the other plan, I was just wasting thousands of dollars every year on that other plan. So, but that's just a benefit that you should look at and you consider when you're looking at your healthcare plans and seeing what options are available to you. So.
Absolutely. And so, like I stated before, Adrian, we talk about these plans a lot. Although my company has an HSA, I don't take advantage of it because of my affiliation with my service, and we don't have to. Also, another one they don't talk about here is that for prescription costs. So there is insurances out there for prescriptions, because those who are diabetics, insulin, that's a major expense in some people's households. And and some of them wonder or try to figure out how they're going to be able to cope with an expense such as that. So this is not going to catch every insurance that you probably taken advantage of. These are just just one of the top 8 that Dave said that you need to take a look at. Like number 5. Number 5 is long-term disability insurance. And what I mean by long-term, it tells you right here in the wording. Don't think permanent disability, which could sideline you and your ability to work. And so this is one that I have, but I don't pay for. It is offered to me through my company, that my company pays for this for me, and so I'm able to piggyback off that perk or that benefit from being affiliated or employed by my company. And so the thing of it is, it protects you from losing income if you're only able to work for long stretches of time because of illness or injury. I have an employee right now who's out currently for about 6 months for knee replacement. And so, and I know he doesn't have the necessary PTO to cover all that time, where this is what's going to kick in for him. Also, I have a young lady who's absolutely getting ready to go on maternity leave, and she hasn't been with the company long enough to accrue enough hours for to stay out the length of time that she needs in order for her to, with her baby. This is what's going to take the place of that. It's going to provide her ability. Now, the one thing you have to take a look at when they come down to long-term disability insurance is that you have to know what they're going to pay out. So if your dollar amount is here and they only want to pay out here, then you need to understand that we're doing that. So, so she's going to be out about 6 months, and I believe he's going to be out 6 months, which it talks about that down here. Another benefit we have here is long-term care insurance. And this is something that Dave says that, and I don't have this, I stand corrected. I told Adrian I had that. I have long-term and short-term disability insurance.
Disability. Mhm.
Yeah, those are the two things that's provided to me by my company. Long-term care insurance. Now, I know my father has this because I've seen the documents for that. So in the event, my father is 70 years old. I believe he got his just before he retired, being a fireman. And hasn't utilized that, but he wanted to make sure that he had it in case he ever had to utilize it, because in his terms is that he's already raised us and he wants to make sure that we live our life. He doesn't want to burden us from his perspective with us taking care of him in his older years, which I told Dad it would be, we could take care of that real quick with a wheelchair and a tall flight of stairs, and this all be over in a few minutes, and he would never have to worry about that. But nonetheless, we decided to get the long-term care insurance so we could forego that part. And but it helps him with hospice. If we ever need to bring someone into the home, because my dad is never going to leave his house. Although I have a room in my house that I says that, hey, Dad, if you ever need to stay with us, this is the parents' room. It's dedicated to the parents. He's like, nah, he's comfortable in his own space. I recommend that anyone who find themselves, because, we don't know what life may throw at us, where we may need some help. And we don't know if that help is going to be there, or your spouse or your loved ones can be able to provide you that care. And so this is one of those cares that I think everybody should consider. Not only when you get up in age, but if you know that, hey, it's a probability that you may need to take advantage of some insurance like that, or someone within your family. But my father has that, and my mom has that long-term care insurance. Here's another insurance that a lot of us probably don't have, but we hear about all the time, and that's identity theft protection. And I would tell you, I never had anybody to steal my identity. I had attempts of my identity to be stolen, but they never were successful because I have this. And you can get this through some of your the individuals like Equifax, TransUnion, Experian. Some of those credit agencies will actually offer you with your credit report subscription. They can offer you identity theft protection. Some will give you up to $1 million. Now, again, I've had this happen to me before. I've had where someone tried to steal my identity and falsify, by getting credit cards in their name or lines of credits in their names. But this protected me, and also it prevented me from having to be the one to pay out on those things when they come to find out those things were fraudulent and it wasn't me who done that. And as it states here in this topic, in fact, in 2021, identity fraud study released by Javelin Strategies and Research said identity theft losses added up to $56 billion in 2020. And right now, I've seen this ramp up even now today, where people are soliciting people, and I've seen on the news here locally how individuals have given away their personal information to individuals over the phone. You're getting these unsolicited text messages on your phone now, and also through email. And it's so easy to do by clicking on a link in this day and age, where these people can get access to pertinent information or give you any of get any of the little bit of tidbit information like your birth date, some pertinent information where you lived at and previous addresses, things of that nature, where they can replicate themselves as you to get access to any of their lines of credit or filing a false return. One of the biggest things that's happening right now is a quick deed, where people are putting quick deeds on elderly people home and getting the rights to that person's home. So identity theft protection is one of the things that I think you should consider and think about, especially for your kids. And then the last one that Dave recommends that we get. Now, there's a dollar threshold that's associated with this, is a umbrella policy, which adds an extra layer of protection for you and your assets when you need coverage that goes beyond the homeowners and audio insurance. So it says down here that Dave recommends the umbrella policy for anyone whose net worth, which you all will be there at one point in time or more, a few $100s a year, that policy may cost you for a liability coverage up to $500,000 to $1.5 million. But you need to talk to a local provider for what type of umbrella insurance that you may need. I know that my current insurance provider does provide the option for umbrella policy. I just haven't taken advantage of that yet. So those are the 8 ones that we consider that are important, that they consider that important, that we believe everybody should take into consideration to applying and having at one point in time.
Mm-hmm. Oh, I want to say Karen made a comment here as well that she said that she's had a couple of people try to steal her identity a couple of times. She said another thing that people can do as well is work with the credit reporting agencies to put a freeze on their account. So that way they can actually turn it on and it's frozen, so nobody can authorize any kind of open any accounts or anything until it's, so you can't even open up one yourself until you unfreeze the account. So because we tried to open up a checking account and we had a freeze on our account since we weren't, utilizing any kind of credit or anything. So we had a freeze on ours, and I forgot that I'd even put it up there. And we couldn't even open a checking account until we unfroze it. So, but yeah, that's another thing to keep in mind as well. So
yeah,
but yeah, but guys, but guys, that's everything we wanted to talk about. Like I said, it's Monday night, so I know football is right around the corner. Everybody got to get ready for their Monday night football. So we won't hold you guys long. So we're just gonna go ahead and wrap this up for tonight. But we thank you, and we also want to give you guys a little tidbit. We're gonna be talking about investing next week and 401k loans. We're gonna talk about Roths. We wanted to do it this week, but we figured this was more important to talk to folks first about making sure they have these things in order, because this situation here are things that can really derail your whole debt-free journey real quick in the blink of an eye, and it can put you way, way behind any of these things. So these insurance policies that we talked about tonight, insurance plans and things, are really there to help transfer that risk away from you and your household to the insurance companies, so you're not taking the brunt of that risk when life happens, because life is going to happen regardless of whether we think everything is going to be peaches and cream all the time. But when life happens, you want to make sure that you're properly prepared. It's one thing that I've always said: I'd rather have it, not need it, than need it and not have it. So,
yes.
So that's with insurance. That's super important that we make sure you guys take that into consideration, because everybody's always passionate and wants to learn more about investing, because they understand that investing is a big part of building your wealth journey and compound interest and all those things. But there's some other things that you need to make sure that you have lined up before you get to that point. And everything works in a season. So we believe there's a season for everything. And, I believe that God has a plan for everybody's lives. And then once we get in agreement with what he has for us, you'll see things happen that you didn't even think were possible. So with that, guys, I'll leave you guys with this. We continue to encourage you guys to let your faith be bigger than your fear, and to continue to lean on God for all that you do. And guys, we'll see you guys next week. Enjoy your Monday night football, and we'll see you guys next week as we talk about investing and talk about Roths and 401ks, guys. So you guys have a good evening. Do you have anything you want to add, Rondell?
No, I just want everybody to have a great evening and thank you for joining us tonight.
Okay. All right. Thank you, guys. Y'all have a good one.